Hi traders, welcome to this video. Today I'm going to be taking you through a Euro US dollar live trading day that I did yesterday. I'm going to show you what I traded, why I traded it, and the outcomes of those particular trades. And this is going to show you kind of how you can manage risk, for one, how you can day trade essentially using this kind of strategy that I used yesterday. So let's dive straight into it. Here you can see I have my Anzo Capital live trading account, and these are all the trades that I took yesterday, and I traded pretty much from London open all the way through to kind of like New York close, essentially, or at least halfway through the New York session. And I was looking yesterday to see how the market would kind of shape up. So let me show you my usual kind of layout. So I usually have this type of layout here where I have a 30-minute chart on the left-hand side, a 5-minute chart in the middle, and then a 1-minute chart on the right hand side. And this is only for day trading purposes. You can do this on higher time frames as well, using a 3-step multi-time frame method. If anything, I always recommend using a multi-time frame method when you trade in the market so that you can visually see what's happening on those higher time frames. So let's kick it off with the 30-minute time frame. What was I looking at yesterday? So you can see here on the chart, this is Euro US dollar. If we go to the daily time frame first as well, we can see that the overall trend for Euro US dollar is down, right? We can see that market's making lower lows and lower highs. So essentially for me, especially at this kind of moment in time, I liked the idea of buying US dollars against the euro. Now, my thoughts on that are starting to waver a little bit. I am starting to maybe pivot a little bit and starting to switch from maybe more a bit of a US dollar weakness in the markets. But for now, I'm still that kind of dollar bull until euro dollar kind of makes new higher highs on the daily chart. Still pretty much on that euro dollar downside. The fundamentals are starting to switch though, and I'll talk about that a little bit later. But looking at yesterday, my bias was down. Okay, reason why as well, we came into this kind of area of structure here, and if I just grab my adjustable market profile tool and highlight this area here, you can see that we had large sort of volume, well, not volume spike, but large spike on the market profile. And that was an area of resistance. So, you know, we've broken below last month's value. I wanted to kind of continue to see if we were going to get that kind of downside, perhaps into sort of the 133.50s. So that's what I'm kind of looking for, have been looking for. But how does that help me in a day trading environment? Well, it means that I want to be looking for breaks to the downside, essentially on lower time frames. So when I go back to my 30-minute chart, you can see that the market had started to kind of break a little bit lower. We were failing to really make any new higher highs, right? And the market was then starting to break and make new lower lows. So I knew I wanted to kind of be on the short side. And then yesterday, the day before, on the 7th of July, the trading day was pretty much inside the previous day, right? So there was nothing really amazing going on. But we then had some geopolitical news, right? We had the fact that Trump was now attacking Iran essentially again, and we saw the geopolitical escalations kind of advanced. Now, when I look at the 30-minute profile here, I'm going to zoom in a little bit. When I look at that 30-minute profile, you can see that actually price opened lower, right? We gapped a little bit lower. The market then hit that 114 handle and rallied back to the upside. And this was pre sort of London market. I think we were trading around about sort of here when London opened, right? And then we saw a little bit of an advance into the point of control of the day before. Okay. And this is why I love using market profile. Okay. Because we have this kind of little rejection in there. We rejected that. So essentially, once we rejected that, I like the idea of selling towards 114. And then if we broke out of 114, I like the idea of going down towards kind of like the 113.75 handle. We didn't get that in the end, but you know, that's what my thought process was going into yesterday's trading. Going into the 5 minute, we can kind of ignore the 5 minute for a little bit. I only use that for kind of direction on the lower time frame when I'm looking at a trend based situation. And what I noticed was, so let me just open the 1 minute fully. So this was the Asia session through to London open, right? This was obviously this level in here around about that 114.30 was the point of control of the previous day. And we rejected that and we broke lower. We came all the way down into the Asia session value area low, rejected, went all the way back up into the value area high. So at this point, I was like, well, I like the idea of price staying within this value area if it rejects. Okay, so that's essentially what I looked for. I looked for the market to continue to reject those kind of value area highs and lows. And as I kind of expand the day on and I, you know, expanded the trading day, you can see those kind of dotted lines there for the value area high and the value area low also expanded out. So my first trade was, I took the first trade a little bit early, I must admit. We kind of, well, a little bit late, sorry. We kind of rallied up, rejected. Let me just zoom into that so you can see it a little bit better. Rallied up, rejected. And I missed the initial move, right? The initial move for me would have been probably around this close here. But I've kind of missed that initial move because this is what can happen when you trade in lower time frames. This is the 1 minute time frame, right? So I missed that move. So I ended up selling below the candle low instead and looked for sort of a target that was a little bit lower, right? So you can see my target was just in and around this area here. Now, my initial target, and the reason why that hasn't triggered the target there is because my initial target was actually a 2-to-1 return. So if I put that there, that there, I was looking for a 2-to-1 all the way down through here, or at least, you know, down at this 1-to-1 area. But I didn't get that. Market rallied up. Okay. Came and retested that area. So my stop loss was above these highs, safety net, right? Because you can see there's a rejection here above the value area high. It then rejected it again. So I thought, well, actually, this is a better situation than what I had over here. So I ended up taking a short here and a short here, adding in 2 positions, looking to target down in this area here. So you can see that one came in and hit targets there. It then rallied on a little bit, went all the way down. I could have easily, on the second trades at least, had that sort of 2-to-1 return, but I didn't. I had, you know, sort of just over a 1-to-1, around a 1.5-to-1, which is what I usually like to target when I'm using sort of day trading tactics, is around about 1.5-to-1. But I could have easily had 3, maybe even 3.5-to-1 out of those trades. The next trade then, so as the day goes on, I like to kind of increase the profile out as the day kind of trades on so that we can see what is happening over sort of the session. I also like to kind of bring it forward a little bit to the, let me just bring that in, to the London session. So when London session starts, I also like to have a little profile going on there as well, just to kind of show me how London is trading. And you can see, so the second, or sorry, 1, 2, 3, fourth trade really was a trade off of the point of control. Right, so we were coming into the point of control of the day. We were rejecting it. We then closed below the 50 moving average. So I shorted in here, and you can see targets were all the way down at that sort of current day low. Okay. Now what happened was I wanted to put my stop loss in a safe place. So, you know, putting it above the value area high would have been a bit tight, but that, you know, the safest place probably would have been above here. But I moved my stop loss just above this 200 moving average, give it a little bit of a gap, just thinking that maybe that, you know, it needed it. And it did. You know, the market came down, hit the value area low, rallied back up into near value area highs before rejecting again. So I added in another short position in here. Now, You might be thinking, well, that's a lot of trades. That's a lot of positions to be added into the market, especially when you're trading like 2 or even having 3 trades on at once. But I'm trading these at a very low risk. So when I say low risk, each trade was about 0.25% risk of my account value. Okay. And that gives me breathing room. So let's say this one stopped out initially, right? Let's say that got me stopped out. That one there would only be 0.25% of my account. It's not a 1% loss, right? If I had taken all these trades and lost all these trades, you know, I'm looking at being sort of 4 or 5% down in the day, which is just crazy, right? We don't ever want to really get to that point. My max risk when I'm day trading is 1%. That is it. I have to split those orders up. Now, I usually take 2 or 3 trades, so I need to split that up again. So instead of going sort of 0.5%, because then again, that kind of limits me, I'll go 1/4%, okay? Because then that gives me breathing room that if I get it wrong a couple of times, I can add in again. Doesn't matter. And then I can use the capital from the profits to then trade with on the day, okay? Because then I've got a buffer to work with. And that's how you should view day trading. The second thing you should notice is I always use a stop loss. Okay, this is something that most traders don't do, or especially from traders that I work with or are new to the markets, because they think that their stop loss is going to be liquidity for bigger players. Trust me, the bigger players cannot see your orders. Okay, but what retail traders do, they place their stop losses tight, so they think that they're going to get knocked out by the big players. So for instance, this would have been a perfect example of that. If I had placed my stop loss here, then I would have been taken off. And then if I was risking 1%, I would have been fearful to add back into the trade here. However, I put my stop loss in a very safe place. There was this low node area here. There was the value area high. So that's a strong level of resistance, right? And we had a false break of that in the end. And then the market traded lower. So, you have to put your stop losses in safe places. Okay. Now, again, got in here. That one was probably one of the best trades of the day for me. So as time moved on, I just noticed that despite all this geopolitical tension that was around, the market was pretty sideways, right, at this point. So I was trying to look for a breakout to the downside, essentially, because I actually was doing some more research and thought to myself, well, actually, if price does have a trending day and we break lower, let me just go to a 15-minute chart here, where could price go to? And I was in my head thinking, well, if we do get a runner and the market goes, next obvious place is down here, down at these swing lows here. But we could also come all the way down because the geopolitical tension was so high. And we saw all these reports of the US bombing Iran and retaliation comments from Iran and all this kind of stuff. That was a potential for the dollar to be stronger. So I was looking for that breakout move as well. You can see my target was actually only 113.84 on that particular move. But I tried to anticipate the breakout. Now, that is probably my worst trade of the day, right? Because I didn't technically wait for the breakout, for the pullback, for the continuation. So that's slap of the hand, no good. But again, 0.25% risk. Stop loss way above value area high because I could give it the room because I was looking to try and target a bigger area. Didn't work out. Market rallied up, came up into the value area high, again, shorted around the value area high. And because the money from this one covered this trade and this was back at break even, I just got out because it was clear to me that I needed to wait for that catalyst to break out to go further down. And I didn't have it. So I took that one on the chin. But essentially, that was the trading day. The market then in the US session, so if we just drag a vertical line here, the US session is around about here. Okay. And at the start of the US session, market rallied. And I was like, interesting. Come up into value area, high areas, rejected. So again, at the time, rejected in those areas, and then started to trade. So I was like, okay, the US session is starting to agree with everything else that we've seen throughout the London session. But again, we came down, we took out the current day low, and look at that big move back up to the upside in there. And I didn't catch any of that move there. Wasn't interested in trading at that point. You know, for me, that was 4:30 for where I am. So that to me is, I don't really trade past that time. But you know, if you're looking at trying to trade that type of move, look what happens. This is how you could have traded it, right? Market rejects lows, right? Comes back inside. Now, if I looked at this on a higher time frame, it's probably a rejection wick of that low, right? So if you look at it on a 5 minute, maybe in there, look, you can see how price is kind of like stalling at that low there, and then we break back inside value. If you trade with market profiles, you'll know that a break back inside value means that we could probably trade back to the other side of value. Okay, so we came back in, came back there, look at that, rejected at value area low, boom, big move back up. And you could have just been looking to buy these types of moves back into the value area high, because yesterday was that sort of, you know, I call it it was a double distribution day, to be fair, because you had this move up here, but you can see it looks like a capital B. And basically, it just means that it was a bit more of a range day. You could see the value being built at the lows in here. So you could have just looked to trade within those kind of two value areas, to be fair. So that was my trading day on Euro yesterday. What am I looking for today? Well, the picture's kind of changed, right? If I go back to that 30-minute time frame and drag my profile over to what's going on today, right, we can see that price is already trading above, you know, value that was built yesterday, right? So it's looking a little bit more bullish. We do have all these kind of resistance levels up here, these kind of resistance highs that we can't really ignore. But it looks like the market is actually moving a little bit more with dollar weakness. Now, that could be because some of the Federal Reserve, in the FOMC meeting minutes last night, the Federal Reserve was talking about the situation of most members thought that the rates were high enough, basically. So that's adding a little bit of dollar weakness in. We've obviously seen some recent dollar data, which hasn't been the best either. We saw NFP numbers coming lower, X, Y, and Z. So the dollar strength narrative is starting to fade a little bit. But, you know, these geopolitical tensions can't be ignored. And that's why it's such difficult trading conditions at the moment, because of that. So if you are trading, day trading, lower your risk. You know, like I said, I use 0.25% per trade. Always use a stop loss. Always use a stop loss. Protects your capital account. And obviously, you know, if you keep moving it back and forth, it's not good. Okay, it's not good for your psychology either. So that's something to look into. But yeah, this is a different type of video. I wanted to just kind of do this. There probably won't be these that often. I only day trade when there's a lot of volatility around and things like that. So if I do some more trading, I will let you know. And hopefully we get some more decent moves. But we can see today, like, you know, the market is kind of coming back towards value. So there could be a potential for that. So thank you for watching. I hope you enjoyed this video. If you did, please like and subscribe. I also do have other videos coming up. So the Markets in 3, where I give you an in-depth analysis of macro, what's going on in the markets, some charts to watch for your trading day, and a skill of the day. So if you want to upskill yourself as a trader, check out those Markets in 3. It usually is a live stream, but I'm changing that a little bit into just videos. So keep a lookout for those Market in 3 videos as well. And I will speak to you very, very soon. Thank you.